Hello, this is MrChris. Today is Wednesday, August 20, 2025. I did not know that there was a flash crash on ulty last night. Apparently, it dropped down to $4.59 per share. Rumor is that there is a massive sell-off due to margin calls during after-hour trading. Good job for those who were able to buy at the dip. I do not use margin. I don't recommend it because you become dependent on your broker's whims. Now today we will talk about my great Roundhill experiment. The market pulled back this week, so I decided to take advantage. Instead of sitting in cash, I bought into income-producing ETFs. But here's the twist. I didn't buy Yieldmax funds this time. I bought 100 shares of each of the Roundhill weekly pay ETFs. But first, a disclaimer. Hello, this is MrChris. I was an engineer and a project manager in an oil and gas company till last August 23, 2024 when I was forced to retire. So I started trading the no-loss method of the wheel strategy and investing in high-yield funds from Yieldmax. I'm not a financial advisor, and all content of my channel, including this video, is for educational, information, and entertainment purposes only. I am only sharing with you my experience in generating my retirement income. Please conduct your own research and proper due diligence before investing. If you like the content of my channel or any video in my channel, please slap that like button, subscribe, and comment. I would like to hear from you on how you generate your retirement income. Okay, let's go. Roundhill's weekly pay lineup pays dividends every single week. Unlike Yieldmax, which generates income by selling covered calls, Roundhill uses swaps to capture 120% of the weekly return of the underlying stock and then pays it out. Here are the 15 ETFs I bought together with the underlying stocks used by each fund. PLTW, this is for Palantir. HOOW for Robinhood. MSTW for MicroStrategy. NVDW for NVIDIA, TSLW for Tesla, COIW for Coinbase, AMDW for AMD, AAPW for Apple, AMZW for Amazon, AVGW for Broadcom, METW for Meta, NFLW for Netflix, BRKW, this is for Berkshire Hathaway, GOOW for Google, and MSFW for Microsoft. Compared to Yieldmax funds, these Roundhill ETFs use swap agreement instead of synthetic option strategies. Here's what Roundhill says about its strategy to provide weekly distribution. Quote, "The fund is actively managed and seeks to achieve its investment objectives by investing in total return swap agreements and common stock that in aggregate return approximately 1.2 times or 120% the calendar week total return of common shares of the underlying stock." Unquote. Instead of selling covered calls, the fund manager uses total return swaps. So what is a total return swap? I am not that familiar with it, so I googled it and went to the Investopedia website to have a fair understanding of it before I purchased my first Roundhill weekly payer ETF. So here's what Investopedia said about total return swap. A total return swap lets the receiver, in our particular situation this will be Roundhill, benefit from a reference asset without owning it. These swaps are popular with hedge funds because they provide the benefit of a large exposure to an asset with a minimal cash outlay. The two parties involved in a total return swap are known as the total return payer, which is probably a major investment bank, and the total return receiver, and again in our situation this is Roundhill. The total return receiver collects income from the asset and benefits if the asset's price rises during the swap's duration. In exchange, the total return receiver must pay the asset owner the set rate over the life of the swap. If the asset's price falls over the swap's life, the total return receiver will be required to pay the asset owner the amount by which the asset has fallen. Based on my research on how total return swap works, I seem to understand it and feel comfortable making an investment on these Roundhill weekly payer funds. Here is how I set up my Roundhill portfolio, and I ran the numbers. With 100 shares of each ETF, except for PLTW, my total investment came to about $73,800. I have 200 shares of PLTW. The rest are all 100 shares. Now, based on the recent payouts, the average weekly dividend, which is the total dividend from these funds, is about $1,050 per week, or close to $4,200 a month. However, note that the recent set of dividend, which was paid last Tuesday, so this is August the 19th, for this portfolio, would have been $1,665. Unfortunately, I did not make the purchase till yesterday. If I had purchased these funds last Friday, I would have received this $1,665. By the way, Roundhill pays every Tuesday, so my first dividend will be next Tuesday, August 26, 2025. Now, if I had put that same $73,800 into ulty, I will get about 1,250 shares. And at 10 cents per share per week, that's about $4,800 to $5,000 a month. So yes, based on the method that I use to compare other funds with ulty pays more at today's levels. But here's why I still went with Roundhill. These are the reasons why I still went in and created this portfolio of Roundhill weekly pay ETFs. First, of course, diversification. Instead of being concentrated in one Yieldmax ETF, I now had exposure to 15 big names across tech, crypto, and finance. And then, of course, the possibility of a higher payout. Ulti's dividend is steady, and maybe capped, while Roundhill payouts can fluctuate but could end up higher. And then, of course, the weekly cash flow. Just like ulti, these ETFs keep the income coming every week. And this weekly pay schedule is a game changer for me. Yieldmax pays typically on a Friday, while Roundhill pays on a Tuesday. So having both portfolios will result in 2 paydays per week for me. So essentially, I've created my own fund of weekly payers, a customized income machine that balances stability and growth potential. Now, if you kind of compare it to how Yieldmax have created YMax, I think I will call this one RMax. Jokingly, it's kind of like YMax. But anyway, I'm really excited about this Roundhill weekly payer ETF. Note that I'm treating this as an experiment, and over the next 6 months, I will track whether my Roundhill weekly income outpaces ulti or if ulti remains the stronger choice. This way, we'll see in real time whether diversification plus upside potential can beat ulti's steadier payout. Now, in reality, if I get at least $1,100 a week from this portfolio, I will keep it and maybe expand and buy more shares later. So for me, this isn't about picking one over the other. It's about building multiple streams of weekly income, and I will keep sharing updates so we can find out together which approach works best. And I think later on I will move all of my funds into weekly payers. I'm already starting to do that with all the rest of my Yieldmax monthly payer. I'm slowly but surely converting the monthly payers into weekly payers. Okay, that's it. And I will see you in the next video. I hope you like this one. Thank you. If you like this video or any of the videos in my channel, please hit the like button and subscribe, and join me in my journey in generating my retirement income through trading options and investing in high-yield funds like Yieldmax. If you have any comment or question about the no-loss method of the wheel strategy or my perspective about Yieldmax, please write a comment and I will answer them the best I can. This is MrChris. Thank you, and I will see you in my next video.